You know why you keep switching strategies every 3 weeks? It's not because the strategies don't work. It's because you never actually trusted them in the first place. Think about the last time you abandoned a trading strategy. I bet it wasn't after months of rigorous testing and careful analysis. It was probably after 2 or 3 losing trades in a row. You saw that drawdown and immediately thought, this doesn't work, and you went hunting for something new, something better, something that would finally be the answer. And here's the brutal truth. You're not going to find it. Because the problem isn't the strategy. The problem is that you're jumping ship before you ever gave yourself a chance to see if the strategy actually works. You're trading strategies like you're swiping through dating apps. One bad date and you're on to the next profile. But trading doesn't work that way. Every single profitable strategy in existence goes through losing periods. Every single one. If you can't stick with a strategy through those inevitable drawdowns, you'll never make money trading. Period. So the real question isn't how do I find a better strategy? The real question is how do I build a strategy I actually trust enough to follow through the hard times? Because until you have that trust, you're just spinning your wheels. You're collecting strategies like they're Pokemon cards, but you're never actually making consistent money. Let me tell you what happens when you don't trust your strategy. You take a setup that fits your rules perfectly. The entry is clean. The risk-reward looks good. Everything checks out. But somewhere in the back of your mind, there's this nagging doubt. Is this really going to work? You enter the trade, and immediately you're second-guessing yourself. The price moves against you slightly, still well within normal price action, but you're already thinking about cutting the loss early. Or worse, moving your stop-loss further away because maybe you didn't give it enough room. When you don't trust your strategy, you start making random modifications on the fly. You see a setup, but you add some additional filter that isn't part of your rules because this one feels different. You skip trades that fit your criteria perfectly because you have a bad feeling. You take trades that don't quite fit because you have a good feeling. You're not following a strategy anymore. You're just gambling with extra steps. The cycle goes like this. You find a new strategy that looks promising. You're excited about it. You take a few trades. You hit a normal losing streak because that's what happens in trading. You lose confidence. You start modifying the rules or cherry-picking which signals to take. The strategy stops working because you're not actually following it anymore. You blame the strategy. You go looking for a new one. And the cycle repeats. I've seen traders do this for years. They have a whole graveyard of abandoned strategies. They can tell you about every system they've tried. This one looked good but didn't work. That one had too many false signals. This other one worked at first but then stopped. But here's the thing. They never actually traded any of those strategies long enough or consistently enough to know whether they worked or not. They were constantly interfering with the process, making it impossible to get any real data. And the really frustrating part? Some of those abandoned strategies probably would have made them money if they just stuck with them. But they'll never know because they didn't trust the process long enough to find out. So, why don't traders trust their strategies? The most common reason is they didn't build the strategy themselves. They found it on YouTube or bought it from some course or copied it from a Discord group. And look, there's nothing inherently wrong with learning from others. But when you're trading someone else's strategy, you don't really understand why the rules are what they are. You don't know what market conditions it was designed for. You don't have any ownership over it. So, when it hits a drawdown, you have no foundation to stand on. You don't know if this is a normal drawdown or if something is broken. You have no way to evaluate it because you don't really understand it. The second reason traders don't trust their strategies is they never properly tested them. They backtested for maybe a few hours, got some promising results, and immediately started trading real money. They skipped the entire process of understanding the strategy's statistical properties. They don't know what the maximum historical drawdown is. They don't know what the win rate should be over a meaningful sample size. They don't know how the strategy performs in different market conditions. So, when they encounter normal strategy behavior, it feels abnormal because they have no baseline. The third reason is the strategy doesn't actually fit their personality or lifestyle. Maybe it's a scalping strategy, but they don't have the temperament for rapid-fire decision-making. Maybe it's a swing trading strategy, but they don't have the patience to hold positions overnight. The strategy might be objectively good, But if it requires you to act in ways that go against your natural inclinations, you'll never trust it. You'll always be fighting yourself. Here's what you need to understand. Trust in a strategy doesn't come from finding the perfect system. It comes from doing the work to build unshakable confidence in what you're trading. And that work is systematic. It's not about positive thinking or visualization or mindset exercises. It's about going through a rigorous process that gives you concrete reasons to trust your approach. First, you need to either build your strategy from the ground up or completely deconstruct someone else's strategy until you understand every single component. You can't just copy the rules. You need to understand the logic behind each rule. Why does this strategy use this particular indicator? What market behavior is it trying to capture? You should be able to explain every aspect of the strategy to someone else without referencing the original source. If you can't do that, you don't understand it well enough to trust it. Second, you need to backtest the living hell out of it. And I don't mean clicking through 20 trades and deciding it looks good. I mean testing it over hundreds of historical trades across multiple years and different market conditions. You need to see how it performs in trending markets and choppy markets, in high volatility and low volatility. You need to calculate real statistics. What's the win rate? What's the average win versus average loss? What's the maximum drawdown? What's the longest losing streak? How many trades per week does it generate? You need these numbers written down. Because when you're in the middle of a losing streak in real trading, this is your anchor. You'll be able to look at your data and say, okay, I'm currently on a 5-trade losing streak, but the historical data shows that 8-trade losing streaks have happened before and the strategy recovered. Third, you need to forward test with a demo account or extremely small position sizes. This is where you trade the strategy in real time, but without significant financial pressure. Backtesting shows you if the edge existed historically. Forward testing shows you if you can actually execute the strategy in real time. Can you identify the setups as they develop? Can you enter at the right prices? Can you manage your emotions during the trades? You'll discover implementation issues that backtesting never revealed. You should forward test for at least 100 trades or 3 months, whichever is longer. Yes, this is boring. Yes, you want to start making real money now. But this step is what separates traders who trust their strategies from traders who abandon them at the first sign of trouble. Fourth, you need to start trading real money with the smallest position sizes that feel meaningful to you. Not paper trading anymore, but real money where wins and losses actually matter. But small enough that a normal losing streak won't devastate you financially or emotionally. You'll discover emotional reactions that didn't show up in forward testing. And here's the key. You commit to trading this strategy with small size for a predetermined number of trades. Maybe it's 50 trades. Maybe it's 100. But you decide in advance that you're going to see this through to that number. No matter what, during this phase, you track everything obsessively. Every trade goes in your journal. Entry price, exit price, outcome, whether you followed your rules perfectly. You calculate your running statistics. After you complete your predetermined number of trades, you do a comprehensive review. How do your real trading results compare to your back-tested expectations? If the numbers are reasonably close, you've just validated that your strategy works in real time with real money. That's trust. That's not hope or belief or positive thinking. That's statistical evidence that your edge is real and you can execute it. Here's the thing about trust in trading. It's not faith. It's not blind confidence. It's evidence-based certainty that comes from doing the work. When you've back-tested hundreds of trades, forward-tested for months, and successfully executed the strategy with real money, you're not hoping it works. You know it works because you've seen it work repeatedly under various conditions. And when you have that foundation, drawdowns don't shake you because you expected them. You know they're part of the process. Let me be absolutely clear about something. Building real trust in a strategy takes time. It takes months of testing and documentation and small-scale real money execution. Most traders aren't willing to do this work. They want to find a strategy and start making big money immediately. So, they skip steps. They backtest for a few hours, maybe forward test for a week, then jump into full-size trading. And they wonder why they don't trust their strategy when it hits a rough patch. You can't shortcut this process. Trust is built through repetition and validation. Once you've built that trust, trading becomes completely different. You're not stressed about every trade. You're not second-guessing your rules. You're not constantly looking for new strategies. You're just executing your edge mechanically, letting the statistics play out. You become like a casino. The casino doesn't stress about individual hands of blackjack. They know the math gives them an edge. They just need enough volume for that edge to manifest. You're doing the same thing. Stop looking for the perfect strategy. Start building trust in the strategy you have through rigorous testing and consistent execution. That's how you win in trading.